Hello and welcome to this research video into the Neuronirvaman Expert Advisor for MT4. My name is Pedro Espina. I will be your presenter. Dr. Masoud Sajjadi is both the mentor and the product owner of this project. In this video, I will talk about the concepts and functions employed by the Expert Advisor Neuronirvaman and its dependencies to hopefully give some insight into how the Expert Advisor works. So I'll start by taking a look at the class diagram. So Neuronirvaman is our expert advisor, and it has two dependencies. One that is built on top of the silver trend indicator, and another one that is built on top of the Laguerre RSI indicator, and it uses an enhancement which is plus DI. So I will talk about what that means. Before I move on to start talking about the code, I want to do a recap of the state chart diagram. So this is the entire process of Neuronirvaman. Basically, it calls this function supervisor, and based on the value of supervisor, we either place a sell order or a buy order. And then the last thing that I'll do is we'll take a quick look at the sequence diagram, and notice at the sequence diagram we have this function here, orders total, orders send. Then we get to the supervisor. The supervisor calls the dependency files, the indicator files, and based on all of those recommendations, then we place a sell order or a buy order. So now we'll take a look at the document that I prepared. So in this document, so this is a research document. This is where you can download the code for Neuronirvaman. So what market information does it use? It uses a series array that contains the opening time of each bar. Since they use the word bar, I thought it'd be a good idea to talk about candlesticks versus bars. So a candlestick looks like this, and then the bearish ones are usually red. That means that the opening price was higher than the closing price. And the bullish ones are usually green, and that means that the closing price was higher than the opening price. So bars refer to, they're the same as the candlesticks, but they're not, they just have a different shape, but they have the same general idea. They give the same, you can get the same information from looking at the bars that you can get by looking at the candlesticks. Okay, so the expert advisor uses two indicators, the Laguerre plus DI and the silver trend SV2. And what does it do? It checks for the total for the open orders. So that's what this was here when we call this function orders total. And then while there are orders pending, it doesn't send a new order. But once the orders are completed, then you start deciding whether you send a sell order or a buy order depending on what the indicators are saying. Okay, and it issues visual alerts to the screen. Here's a sample output of Neuronirvaman. Here's Euro USD M1, and this is what the silver trend looks like. And we'll talk more about this now. And this is the Laguerre plus DI indicator. So we'll talk more about those in a second. Okay, the built-in functions used in the code, the series array that contains the opening time, the date time. It asks if the trade is allowed. It computes the total orders, so that the pending orders before it sends new orders. Then it selects the orders and processes them. So this is part of the order processing, and then it sends an order based on the recommendations from the supervisor function, which relies on the indicators. Okay, the iCustom function it uses to call the indicator dependencies. Okay, so the first one we run into is the Laguerre plus DI. This has the most information. There's a lot of interesting concepts that come up. The Laguerre plus DI depends on this directional movement index, so I thought I would talk about it. So the way the directional movement index works is it compares it draws these two lines, a positive directional movement, which is the plus DI, which is what the title of the indicator refers to, and a negative directional movement line. Even though the R indicator does not use a negative directional movement line, I thought I would include it in the discussion. So when the positive directional movement line is above the negative, then that means that there is more upward pressure than downward pressure on the price. and if the reverse is true, then we have the reverse condition. So those indicators help us make decisions whether there's an upward trend in price or a downward trend in price, and then we can make decisions of whether to buy or sell based on those. The next one that that is of interest is the average directional movement, which is another indicator. And here's a chart trying to depict what the average directional movement looks like. So the difference between the average directional movement index and the directional movement index is that the values for the average directional movement index are derived from the smoothed out averages of the differences between the positive indicator line and the negative indicator line. And then it can help you make certain decisions. Here are some numbers. So when the strength is above 25, the trend is strong, and the trend is weak or trendless if it's less than 20. So these are the kind of numbers that you can expect from the average directional movement index. And then so you can help assess whether you can do a long position, which means that you buy hoping that the price will rise, or a short position trade, meaning that you sell hoping that the price will fall. And so crosses between the positive directional indicator and the negative directional indicator can signal whether you have a bearish market or a bullish market. Okay, so then we get to the positive directional indicator and the negative directional indicator. So maybe it's a good idea if we have them both on the screen at the same time. And so what is the difference between them? So the positive measures the uptrend, while the negative measures the downtrend. So if it's sloping upward, it means that the uptrend is getting stronger. And if it's sloping down, then it means that the uptrend is getting weaker. And so when it's above the negative one, the price is the uptrend is strengthening. And then so you can use the information from the crossovers of the positive directional indicator and the negative directional indicator to figure out whether there's going to be an event in the change in the price, whether it's going to continue to rise or it's going to start to drop. So that's I guess that's enough about those. The next thing that we want to take a look at is, so one thing that I would like to say is that the Laguerre only uses the positive directional indicator. It does not use the negative directional indicator. So there's room maybe for improvement there when we're talking about the dependency file. So we're once again talking about the Laguerre dependency file. Okay, so it also uses this concept of a moving average, and the moving average helps to filter out some of the action it filters out some of the noise, and it makes it a little bit smoother, so that you can get a better idea of what what's happening with the price. And there's two kinds of moving averages. There's a simple moving average and there's an exponential moving average. The simple moving average is just an average divided by the time period. The exponential moving average gives greater weight to the recent periods. So again, the main idea of the moving average is that it filters out, it tries to filter out some of the noise in the recent price fluctuations. Okay, one thing that is mentioned in the moving average is something called the moving average convergence divergence. And this is a trend following, it's a momentum indicator, and it is the relationship between moving averages. So here's a bit about how it's computed. You subtract the 26 period exponential moving average from the 12 period exponential moving average, and you get a line from that. And so here's a picture of what it looks like. And then you do a 9-day exponential moving average, and that's your signal line. So then once your signal line crosses the MACD line, then you signal whether you want to do a sell or a short position, or you want to do a buy or a long position. Here's a picture of what it looks like. And now we made it to the RSI. So the Laguerre plus DI is an RSI. It's called the Laguerre RSI. So it's a type of RSI. And so what is an RSI? So it's a momentum indicator. It measures the magnitude of recent price changes, and it tries to evaluate whether the asset that you're looking at is oversold or it's overbought. And so and that's going to indicate what's going to happen with the price. So it's from 0 to 100, and it compares bullish and bearish price action. So if the value that you get for the RSI is less than 30, that means that you're oversold, and if it's higher than 70, that means that you're overbought. So here are the lines here in this graph here. This does mention something called Wilder's moving average. So there's a Wilder smoothing concept, which is it's similar to an exponential average, but the difference is that it responds more slowly to price changes than the exponential moving average. So I thought I would add that here since it's mentioned here. So now we have, we're almost there to talk about what the Laguerre RSI is doing. Before we do that, we'll talk about the RSI versus the MACD. So the MACD is the relationship between two exponential moving averages. The RSI is the price change in relation to the recent highs and lows. So you often use them together to make decisions. MACD is not the main. It's really not used in the expert advisor Neuronirvaman, but I thought I would give some kind of contrast to what the RSI is doing, also just to give more background information about these concepts. And then the RSI has the 70 and the 30, which are sort of the defaults, and you can change those if needed. So what does it mean for the stock to be oversold or overbought? So if it's overbought, that means that it's trading above its value. So we expect that the price will come down in the near future. And if it's oversold, that means that it is trading below its value. So we expect that its price will come up. Okay, so now we make it to the Laguerre RSI. So what's the difference between a regular RSI and a Laguerre RSI? The Laguerre RSI has this gamma, which is a smoothing factor, which again is just trying to filter out the noise in the recent price fluctuations, and it uses it relies on the closing price. Our Laguerre RSI is plus DI, so instead of relying on the closing price, it computes an average directional movement of the price, and it uses using the positive trend line, and it uses that as the input of the function. Okay, so what is the Laguerre RSI? It relies on this concept of a Laguerre transform, and the Laguerre transform is just a time transform. So it transforms time so that the low frequency components of the price matter less than the high frequency components of the price. So you're able to smooth out the price fluctuations, and you need less data to do it as well. So it's some kind of time transform, which gives you some kind of advantage. The mathematics behind it are a little bit complicated, and I don't know all the details, but that's basically the idea. So it's similar to just the regular RSI. You still have an overbought and an oversold line, and just those recommendations are believed to be a little bit better because you're using this enhanced Laguerre filter or Laguerre transform. So it's you're using this like Laguerre time, which is a little bit better than linear time, or at least that's the goal of the algorithm. So here are some charts depicting the Laguerre RSI with the overbought and the oversold lines. So here are some of the built-in functions that the Laguerre plus DI code uses. I added this here just for reference when when I'm trying to understand what the code is doing. So if you go down, you see the functions that it's using. This is where it computes the average directional movement. So it uses this as the input instead of the closing price, which is the default input. So the default input is the price and the gamma factor, which is a dampening coefficient, which is sort of how the time it works by transforming the time interval when it does the average, and delaying certain things in time and speeding up certain other things that are believed to matter more. Okay, so these are the functions that it uses. Nothing too enlightening here except this one, the fact that it uses that instead of the standard input. So we make it all the way to the second dependency, so we're almost done. And the second dependency is a silver trend. So what is the silver trend? So here's some preliminary information about it. So the silver trend, what does it do? So basically you're drawing these two lines. You draw this histogram. This is the default setting. So if you type the draw histogram, it'll draw a histogram. Now sometimes it draws the histogram on a separate chart, or sometimes it draws it on the actual chart. This is the uses that you can have with it, and this is how you can use them. So what does it do? It basically has it draws two kinds of candlesticks, blue ones and red ones. The blue ones are for bullish price action, meaning the price is on an uptrend, and the red ones are for bearish price action. So here's a basic trading strategy that you can use, and so you can buy when the indicator draws a blue. That's a signal to buy because the price is gonna rise or it's rising. And you can sell when the indicator draws a red candlestick, because that is a signal that the price is going to drop. So here are the functions that the code uses, the built-in functions, and so nothing too enlightening in these functions. So I'll just go through them, and that's basically the whole overview of the code. Here are the sources where I got the information, so you could take a look at those sources if you need, if you'd like more information. So now that we went through all that, I'll recap and go back to the beginning picture that I showed, which had both the Laguerre indicator and the silver trend. So this is not the best picture, but you can see the blue and the red. It looks more like blue and pink, but it's supposed to be the blue and the red. And here's the Laguerre indicator, although this diagram doesn't show the overbought and the oversold line. Thanks for watching. Here's our contact information in case you have any questions.